So hi guys, welcome to the Daily Horizon View. We are checking out the top fives, and they are for the ASX, and that's the Exchange Traded Funds. Our spotlight today, which is very interesting, I think. This one could be very useful for the average guy or gal's portfolio, is SLF, and that's a State Street Spider S&P ASX 200 listed property fund. This is a good little one, highly rated, so it's definitely worth having a look at. So flick on through to the end if you don't want to hang around for the top five. Yeah, cool, thanks. As always, give us a like and subscribe. If you can subscribe, hit the bell so you get your notifications, because we're here to crack your financial sky. Let's get cracking. So for our top 5 percentage rises, SLF, VAP, MVA, MVR, IHHY. If you're keen just to check out SLF, which is the State Street Spider S&P ASX 200 listed property fund, just skip on through to the end and have a look at it. It's well worthwhile. So we had a lot of movement today in the listed property trust sector. So SLF, VAP, and MVA are both, all three listed property trusts. So people moving some money around and getting into those. So SLF was up 1.32%, which equated to 18 cents on a volume of 45,400 shares traded. Top 5 percentage falls: QAG, CETF, RBTZ, ITW, and IAA. So for those of you who don't know, the QAG is the beta shares agricultural ETF, and that's a currency hedge, and it's synthetic. Tricky little beast, that one. We saw a fall of 4.41%, equates to 24 cents on a very low volume. This is a small ETF, 500 shares traded. Top 5 dollar rises today. We saw VAP, IHHY, IHOO, IHVV, and Core. So as mentioned before, so VAP, which has been our previous spotlight. So if you want to have a look at that, you can go back to my last video, which I focused on VAP, which is another highly rated property trust. So VAP is the Vanguard Australia Property Securities Index ETF. There's about $1.3 billion in market cap. You get a nice dividend yield of around 8% for that one, and it's rated gold by Morningstar. So we saw VAP up by $1.09, which equates to 1.26% on some good volume there, actually quite strong volume. This is probably one of the biggest in class. SLF and VAP are the two biggest in class. For listed property trusts, we saw a volume of 246,600 shares traded. Top 5 dollar falls: IAA, IKO, CETF, IJR, ITW. So IAA is the iShares Asia 50 ETF, and that tracks investment results of the S&P Asia 50. So that one there has a market cap of about 500 million. You get a little dividend there, about 1.96% when I last checked. Morningstar rating of bronze, so it's not the pits, but it's not the best. So they got a bronze rating there. It was down by $1.37, which equated to $1.57. 1.57%. You can get my percents and numbers right on a pretty strong volume of 20,200 shares traded today. Top 5 number of trades. We saw VAS, STW, IOO, IVV, and VGS. So VAS, we saw 195 trades through the market today. Pretty much no movement, so it was flat today. So $0 rise, and so no percentage change at all. Top 5 for volume: VAP, AAA, STW, RSMM, if I can get that out properly, and VAS. VAP, we saw a volume of 246,600, as mentioned previously. It was up $1.09, changing price 1.26%. Top 5 for value, we saw VAP, AAA, VAS, STW, and VGS. So big day for the property trust today. So we saw SLF featured, which it typically isn't, and VAP heavily featured. There's quite a lot of volume going through today. So people looking for a bit more of a stable income. So as mentioned, VAP, which is the Vanguard Australia Property Securities Index, has a rating from Morningstar of Gold, so that's your top rated ETF there. We saw a value of $21.3 million of shares traded today. So quite a lot of movement through that ETF. So there's quite a lot of people becoming more interested in that one. So 4 times the value of your nearest rival in AAA. So we have our spotlight right now. So that's SLF. So let's take a closer look at this one. So that's the State Street Spider S&P ASX 200 listed property fund. So SLF seeks to closely track before the fees and expenses the returns of the S&P ASX 200 A-REIT Index. So the index comprises the leading listed property vehicles in Australia and represents diversified exposure to the Australian listed property market. Exposure is diversified geographically across Australia's major population centres and by sector across a range of property types, including industrial, commercial, retail, and hotel tourism. Investors have been attracted to the index due to the combination of attractive levels of income and opportunity for capital growth, which is offered by the listed property investments. So we have a net asset value of $13.66 today, trading a little above that at $13.84. We have a management expense ratio of 0.4%. We have a quarterly distribution, which is nice. So March, June, September, and December. From memory, June is a big one. You get 6% or thereabouts in June. Dividend yield. So your total yearly dividend yield is 7.27%. Research has shown that using a passive strategy in the concentrated Australian REIT sector can be an advantage. As such, SLF has the potential to produce strong returns. The A-REIT sector has been outperforming in 2009. It's up quite substantially. Investors need to keep in mind that rising interest rates may create a headwind for REITs. So SLF is not the cheapest option, but it can provide reasonably priced, effective exposure to the Australian listed property. So there's also a host of promising looking global options, both active and passive, that investors can consider for broader exposure to property space. There's actually a couple listed in the ASX. I can't remember them off the top of my head. I'll have to do some more research on those ones. So SLF could be appropriate for an investor interested in generating a regular income stream from a relatively stable dividend-paying ETF they're pretty stable types of little investments, but obviously you're going to get your ups and downs. Also have a look at, for comparison, MVA and VAP. VAP, I did a quick video on that yesterday, so if you want to have a look at that, go back to that video and check that one out. Overall, this is a highly rated, so this one gets a silver rating from Morningstar. It's the second biggest listed ETF property, I'm pretty sure. So this is a good one. Got good liquidity, so you can get in and get out reasonably quick. So you can see the performance is pretty good year to date, and also cumulative for the year, just under 18%. So you're looking over at the top holdings. You've got Goodman Group, S Centers Group, Dexus, Mirvac, Stockland, Vicinity Centres, Charter Hall, Unibol, which is a French mob, and SCA Property Group. So there's a high concentration in two stocks right at the top there, and that's probably why the distribution, when you look at it and break it down, is actually quite lumpy. It's quite lumpy in June. Quite possibly could be a reason. So go back and have a look at this one. I think this one's well worth the time and effort to have a look at it if you're looking for a relatively stable income stream. So as always, this is information, not recommending anything. We should be taking your own financial consideration into account, doing further research and getting some additional advice from other sources if required. So we are here to crack your financial sky, and we're doing that with information, because information is power. I think getting the correct information is critical. There's too much noise in the environment these days. Give us a like, hit the subscribe, and if you do hit the subscribe, hit the bell as well, so then you'll actually know when all my videos are coming out. That's quite important. As always, leave a comment if you have any ideas or things that you want me to chase up. Happy to research anything for you. I'm pretty good at finding the information, so let us know. Ciao.